For costing, I use a separate configuration document for costing, and separate folder is also there under the drive. There is a separate folder for costing. Okay. If you navigate to the costing, and here is the costing setup document that I use. Both are same versions only, but when you, in case of Google Drive, if you open the Google document, it's going to create one more copy. Okay, so that's the reason 2 copies are there, but both the copies are same, and I'll delete one copy. Costing setups, and let me open the other copy also. Let me just cross check what is the difference. Both are same, it seems like both the copies. Yeah, both the copies are same. Let me delete just one. Okay, I kept only one copy. So far, we have seen transactions for our items. We perform transactions, and how to evaluate each transaction. How to evaluate each transaction, we'll see from the costing module, and totally around 10 setups are there. Around 10 setups are there. Okay, it won't take much time to configure the setups, and they're also easy, pretty much easy, not really tough. And before I start the configurations, I will explain you the purpose of this module. Suppose if I ask you a question, what is our current inventory value? 53 batch, what is our current inventory value? Or 52, whatever. What is our current inventory value, team?
On hand into price of the item.
On hand into cost of the item, that's right. But what is our inventory value? There is no inventory value, right? Because our items are not having the cost. Correct? Our items are not having the cost.
Cost is not enabled for our items.
Yeah, cost is not created for our items. Okay. So in the costing module, we have to create cost for our items. Then only we can generate the inventory valuation. And also, suppose in case of sales order, we perform shipping, right? We perform shipping. Okay. After you perform shipping, basically you generate invoice. And then later, when you receive the payment from the customer, after that, you're gonna take out the profit, right? After you receive the payment from the customer, you have to identify what is the profit. That profit is nothing but item cost, selling price minus item cost, right? The profit is nothing but selling price minus item cost, right? What is your selling price? You sold it for 150 and your item cost is 120. Then what is the profit here? 30 is the profit here. Right? That is the profit here. And when I say this item cost 120, this can be straight away you have defined, or this can be rolled up. When I say rolled up, suppose let me take this example in a different way. Suppose the selling price of the product is laptop. The selling price is 35,000 and your cost is 30,000. Let us assume it's a laptop. You sold it for 35,000. That is the selling price. And what is the cost of the item is 30,000. So this cost you can directly define, or in case if you are manufacturing the laptop. In case if you are manufacturing the laptop, you can roll up the cost. When I say roll up, all the components, nothing but what is the RAM cost and what is the processor cost, okay, and what is the hard disk cost and what is the screen cost or keypad cost. So for all these items, we define cost, right, in the application for all these items. Suppose let us take for RAM, it is 5,000. Okay, for processor, it is, let us take 5,000, and for hard disk, let us take it is 2,000. Okay, so all these components cost is rolled up to the manufacturing item. Here, what is the end product? What is the finished good here? What is the assembly here? When I say assembly, finished good or end product, all are same. So this laptop cost is rolled up from the components cost. So that is how we derived this 30,000 price. Okay. If you are, suppose, you are not manufacturing the laptop. If you are not manufacturing the laptop, directly, you can define the cost in the application. Here for laptop, it is 30,000. Directly you can define. But when you are manufacturing, you should not define. It should be automatically rolled up from the components cost. Clear? Clear, team?
Yes,
Yes,
sir.
sir.
Yes,
Okay.
sir.
And
Yes, sir.
and also when you define a cost for the item, okay, not only when you define a cost for the item, when you define item cost, not only inventory value, for every transaction, we are posting it on the ledger book, right? Every transaction, it could be miscellaneous receipt or issue or sub-inventory transfer or whatever. Okay, suppose let us take miscellaneous issue itself. When you issue, what will happen? Your inventory stock get deducted, right? When you perform miscellaneous issue, your inventory stock get deducted. That means your inventory valuation also should get deducted, right?
Yes.
Okay. So in your ledger, inventory value should deduct. That means the transaction should post to the ledger. Not only quantity, the value of the transaction. Suppose you are performing miscellaneous issue and the quantity is 100 and cost is, let us take cost of the product is just 50 rupees. Then what is the total transaction value? 500, right? What is the total transaction value?
5,000.
5,000.
5,000.
5,000.
So this 5,000 should be posted to the ledger. Should be posted to the ledger, this 5,000. Okay. And so because of this transaction, there is a inventory value deduction is there. So every transaction that we are performing in the application, that should be posted to the ledger, and that to be posted in the amount, not in the quantity. The total value of the transaction should be posted to the ledger book. Okay. Ultimately, when you see the figures, you want to see the figures in the value, not in the quantity. When you run some reports, so when you run profit and loss report, how much quantity profit you have, how much loss of quantity profit you have, you don't see like that, right? You see that in the number, nothing but in the value. Okay. Coming to costing methods. There are 4 types of costing methods are there. Standard and average, LIFO and FIFO. These 4 methods are there. Okay. So these 2 are widely used methods. These 2, mostly 99.9% customers are using these 2 methods only. I have not seen any client using LIFO and FIFO so far. In my experience, in my projects, I have not seen any client using LIFO and FIFO. Standard and average. I worked on the both standard and average. Okay. Sir, what is meant by standard and what is meant by average? In case of standard, we define the item cost manually. We define item cost. In case of average, the item cost calculated. It's basically, when you say average, it's an average cost itself. Okay, nothing but it's a calculated cost. It's a calculated cost when I say average cost. Calculated cost is nothing but here, for the calculation, system is going to consider, there is a formula actually for the average cost. There is a formula. Okay. In a layman language, instead of a formula, I will explain you in a different way here. Conceptual understanding. Okay. If you don't remember the formula, also not a problem, but concept you understand here. Suppose you have purchased, let us take some item, and today you purchased for 100 quantity you have purchased, and price is 100 rupees. Okay. You purchased how much quantity? 100 quantity for the price of 100. Okay. So right now your on hand, after your purchase, your on hand is 100. Your on hand is 100. This on hand is for how much rupees? 10 rupees. Okay. This on hand is for 10 rupees. Now later, after that, you purchased the same item, same quantity, or it could be different quantity also, but you purchase it for 12 rupees. Okay. What is your on hand now?
200.
200.
200.
So in the 200, 100 is purchased for 10 rupees. Okay. And then 100 is purchased for how much? 12 rupees. Later, in a layman language, I'm explaining it. Okay. Even anyone can understand this example. Same item, and later after some days, you purchased for same quantity, or it could be different quantity. You purchased for 14. What is your current on hand? 300. And out of 300, you purchased 10 for 100 quantity for 10 rupees, remaining for 12 and remaining for 14. Okay. What system will do is, it will calculate the average. It will take the average. So you have purchased this product in different prices. This is your purchasing price. It will take the average. And out of, based on this on hand quantity and based on the price that you purchased, it will take the average, and it will automatically derive the cost for that item. What is the average cost for that item? It will automatically derive. Application is going to take care of that. There is a formula. Application is going to work according to that formula, and that formula is nothing but this one. How much on hand? What is your current on hand? That current on hand you have purchased for how much price? The current on hand you have purchased for how much price? And I mean to say, out of this 300, previously how much you purchased for what is the price? and currently what is the price that you purchased, it will take the average. It will take the average. By taking the average, it automatically fixes the cost of that item. We don't enter in case of average cost. We don't define. In case of standard cost, you define the item cost. You know, you define for item A, 50 rupees. Okay. And for item B, 60 rupees. You define the cost. And for item C is 70. You are going to define the cost in case of standard. Okay. If you want to change the cost, you have to go and manually update the cost. Suppose for item A, you want to change the cost from 50 to 55, you have to go and manually update. And 60 to 65, you have to go and manually update. But in case of average cost, the cost is automatically calculated based on average of your transactions. Based on average of your transactions. Automatically, it will calculate in case of average. That's why this is called as a average cost. Okay. Clear? The difference between standard cost and average cost. And next question is, sir, in which cases client prefer to use the standard cost? In which cases client prefer to use the average cost? Okay. I think you understood the question, right? In
Yes,
which cases client
Yes.
uses standard, in which cases client use average? Only answer is PPV. Only answer is PPV. What is PPV? PPV is purchase price variance. PPV is purchase price variance. Sir, what is the purchase price variance? It's a difference between your purchase price and item cost. Your purchase price and item cost. So this PPV, in case of standard costing method, it could be on the higher side. In case of standard costing. And in case of average costing, this could be on the lower side. Sir, why? What is the difference? Sir, why? What is the difference? Because in case of average cost, this average cost is automatically calculated frequently. Based on your purchase price. Okay. That means automatically, you know, the item cost every time it is getting updated. Right? Based on your purchase price, automatically every time this item cost getting updated. So in case of average, the difference between your purchase price and item cost is going to be low. Suppose let's take this example. For this item, what is the current cost? 55. Okay. And you defined this price 55 today. And after 5 years also, you have not updated this price. This cost you have not updated. After 5 years, you have not updated this cost. After 5 years, definitely this item cost is going to be double, right? Nothing but when you're trying to purchase this product, price is going to be double, right?
Yes, sir.
Yes.
Yes, sir.
Okay. So after 5 years, suppose if it is when you're trying to purchase this item 100 rupees is the price, PO price. Now, what is the system cost? 55. What is the difference here? 45 rupees is the difference. So PPV is going to be high, right? Clear with this example? In case of standard cost, you have to go and manually update the cost. If you don't manually update, it will be remain same. Suppose you define the cost 55 today, and after 5 years also it is 55 only because you have not updated. So it's 55 only after 5 years, but definitely after 5 years, this item purchase price is going to be more. So if the purchase price, let us take, if the purchase price is 100 rupees, and what is the cost of this item? 55. Then what is the difference? 45 is the difference. So PPV is going to be higher side. In case of standard costing, PP is going to be higher side. But in case of average cost, why the PPV is going to be lower side? Because in case of average cost, let us take the same item. This item price is going to be updated very frequently. Correct? This price, whatever you see here, it's going to be automatically updated by the system frequently based on your purchase. Based on your purchase. Okay. And based on the formula. Clear? When your item cost is every time is updating, let us take it is getting updated 60, 70, 80, when it's keep on updating, then what will happen? Your pure price is 100 rupees and your item cost is 80. Then what is the difference here? 20 is the difference. So in case of average costing, the PPV is low. Everyone clear?
Yes, sir.
Yeah.
Average cost is equal to transaction value plus current inventory value minus transaction
Divided
quantity.
by, sir.
Huh?
Divided by.
That's correct. Divided by transaction quantity less current on hand quantity. But you don't need to remember the formula. Even I don't remember this formula, but I know how the average cost is calculated. Stand is straightforward, okay? But in case of average,
Sir, ideally in Google, it's a simple formula. It's a total number of purchase value, sum of the purchase value divided by the total number of quantity. It's simple.
okay. Where you are seeing that formula?
So in Google, generally we use that one. I mean, our software, it has been there, and through that we were calculating weightage average by default.
Okay. Do you have any link for that?
No, sir. It's just
Okay.
yeah.
Yeah, if you refer to Oracle documentation, it gives a lot of data,
Yes.
lot of examples, but as you mentioned, for the straightforward formula, okay. I'll update the formula in the document, okay? But Oracle links are there, and it has a lot of consideration. By considering a lot of things, Oracle is giving this document, but you don't need to go through this much detail. It's not required. It's not required. So if you just understand, this topic, that is enough. No need to remember the formula, and no need to interpret also. No need to interpret the formula also by taking some data. If you have conceptual knowledge, that is enough. Okay, team?
Krishna, I have one
Yes, sir.
question.
Hmm.
When it says total transaction value means, will
Hmm.
it consider all positive and negative transaction happened on this
Yes.
item starting
Yes.
from the day?
Yes.
Okay.
Yes.
Plus current on hand value.
Yes. Yes.
Okay. And how frequently this average cost is getting updated in the system? Any specific rule or something?
We don't create any rule like that, and
Okay.
it will automatically, the moment when you run
Mhm.
some programs, it will automatically calculate.
Okay. We have
There is
a
no,
standard program. Mm.
there is no like it will update every week. It's not like that.
Okay.
It will update based on each transaction.
Okay.
Hmm.
Fine.
It will update automatically based on each transaction. There is no weekly update or monthly update. It's not like that, madam. Any more doubts? Clear?
Yes,
Standard
sir.
costing, average costing. Okay. And you understood the PPV also, right? Everyone?
Sir, purchase price minus item cost. I mean, could you please repeat this? Purchase
Purchase
cost minus.
price minus item cost. What is your purchase order price? Minus what is your cost defined in the application?
Okay.
Okay.
Item cost also. I mean, we defined that, right?
Yes, we define the item cost.
Okay.
In case of average cost, we don't define. In case of average cost, we don't define. But in case of average cost, we will define the start price, start cost.
Okay, sir.
When I say start cost, so this point, everyone, you have to remember. In case of average costing, you have to define the cost only once. Starting cost you have to define. Starting cost you have to define. And later on, you don't need to do anything. Automatically, this starting cost will be automatically updated based on the average cost formula. Understood?
Yes, sir.
What is the initial cost that you have to define? And later on, it will keep on update. That cost will be keep on updated by the system.
Krishna, I have one question here.
Hmm.
If any item having conversion,
Okay.
so rate will be updated on their currency basis, right?
Currency basis.
Yeah.
Can you please elaborate your question?
In terms of conversion, how the average costing will work?
See, when you are defining the item cost,
Mhm.
okay, you define the
Right.
item cost against a currency.
Right.
Okay, and the value, the item cost or the value that you see again is the primary OM.
Right.
Okay,
Right.
and there is something called transaction cost. The transaction cost you will see on the conversion, whatever the conversion that you have defined between primary and secondary. But item cost, it will always display in the primary cost only.
Primary.
That will always display in the currency that you defined for that item cost. But the transaction value it will display in the conversion cost.
Okay.
Okay.
Right.
So clear with this point, right?
Yes, sir.
So here also we have a program, just we have to schedule to run the average cost automatically.
No, this is a program. I'll tell you. Okay. That
Okay.
you'll understand. I'll tell you. I have to tell you the difference between EBS and Fusion. In case of EBS, for every inventory org, nothing but when you're defining the inventory org parameters, when you're defining the inventory org, directly, you link the cost method. Inventory org 1. Okay. What is the cost method? For inventory org 1, we'll use standard costing method. And for inventory org 2, do you use the same cost method, or inventory org 3? In case of EBS, the cost method is controlled at every inventory org level. In case of EBS, it's
Right.
like 1-to-1. Okay. But in Fusion, here in this case, in this example, here how many inventory ordinations are there? 3 are there. Okay. For 2, what cost method we are using? Standard. Okay. For another cost ordination, we are using average. Okay. So in case of EBS, what we do is we define a cost org. We define a cost org. To that cost org, we associate costing method. To that cost org, we associate costing method. And all those inventory ordinations we add to, nothing but all the standard costing inventory ordinations, we add to that cost org. Understood? Understood? We are defining a cost org. To the cost ordination, we are linking the costing method. To the cost ordination, we are assigning the standard costing inventory ordinations. Suppose let's take you have one more inventory org also. Inventory org 4. This is also standard. It should be added to which cost ordination? This cost ordination. Clear? And for this, for average costing, you can use, you have to create another cost ordination, which is average cost method that we'll use. And this or it falls under. Clear?
Yes, sir.
Suppose in future also, suppose there is one more org. Let's take inventory org 5. Inventory org 5. So, so which cost method is used for this inventory organization 5? That's a business decision. Client will take care of that. So for this inventory organization, whether standard should be used or average should be used, that is business will take care of that. Business will tell you how business is going to decide based on this PPV. If they want the PP to be on the lower side, then they will go with the average costing. If they're okay with the PPV on the higher side, they go with the standard costing. It's their decision. They will take the decision. They will just tell you this ordination, the business, nothing but client is going to tell you this ordination is going to follow. Let us take average here. That means this ordination should be assigned to which cost ordination? This, right? Understood?
Yes, sir.
So for one client, if you are using both costing methods, for one client, if you are using both costing method, this is called as hybrid approach. This is called as hybrid approach. You're using both. Okay. That means if you perform any transaction under this ordination, if you perform any transaction on this ordination, it will follow standard costing method. It will follow standard costing method. And if you perform any transaction on this ordination, it will follow average costing method. Clear?
Yes, sir.
What about item? A question to all of you. What about item? Item is same, only one item. For this item, if you perform transaction under this ordination, the cost is calculated based on the standard costing method. For the same item, if you perform transaction under this ordination, you follow which method? Average costing method. Item is same one. But based on the org that you are performing the transaction, the item cost will be calculated according to that costing method. Clear?
Yes.
Yes, sir.
Okay. So here in the Fusion, this is cost method. You are controlling at which level? Cost org level, right? Nothing but, indirectly inventory org level only. Nothing but org level only, right?
Yes.
Everyone clear?
Yes, sir.
Am I too much confusing?
No,
No,
sir.
right?
No,
No, sir.
Okay. Now, in case of Fusion, the cost method, not only org level, you can also control the cost method at category level also. At category level also. And the cost method, you can control at item level also in Fusion. This is the beauty. I mean, all the three you cannot implement at a time. You have to go with one. Okay. So cost method, when I say category level, suppose you have defined categories called electronics. Okay. And you have defined category called furniture. All the electronic category of items, I want to follow standard. Okay. All the furniture category items, I would like to follow average. This is possible. The items which are assigned to this category are going to use which method? Standard costing method. The items that are assigned to this category is going to follow which method? Average costing method. And this is item to item. For item A, I want to follow standard costing. Okay. For item B, I would like to follow average costing. And for item C, I want to follow average costing. And for item D, I would like to follow standard costing. This is item level cost method. Understood? Understood, team?
yes, sir.
Yes, sir.
Okay, so cost method, it can be controlled at org level, or it can be controlled at category level, or it can be controlled at item level.
Krishna, I have one question here.
Yeah.
Let's say, for example, I have a cost of an item at the inventory org level, category level, and item level.
No, you
So
cannot
while
define all the three. You have to go
Oh.
with one.
okay, but
should not.
item, let's say, for example, I have a Hyderabad inventory organization. Okay, so under the Hyderabad inventory org, I define
You are
the
coming
cost.
to the same question.
Okay. Okay, I should not define the org at,
No,
item
you
cost
have
at org
to-
level, right?
Yes,
Okay.
you have to go with either of
Either of the one option. Oh,
one
okay,
option.
okay.
Not
Okay.
all. Okay.
So in continuation of that question, Krishna, if I define a cost org level, then the category and the item level will be auto disabled?
Yeah, we don't define actually. We don't define. This is a setup. Your cost method, you want to control at which level. Okay, if you define org level, it will work at org level. If you define at category level, it will work at category level. If you define at item level, it will work at item level. We don't define all the three. We define only one.
Correct. The system also allows you to define only one, is my question.
Yes.
Okay. So if I define something at an org level for an inventory org, then if I go to, I cannot select the category or the item level option.
No.
Okay, it's one out of the three. And can I ask one more question, Krishna, related to this?
Go ahead.
You mentioned at org level, someone could set a different costing method for a different org, right? So item A you mentioned was a standard cost method for inventory org 1 and average for inventory org 3 and 5. When you just gave the first example, right? In practically, I'm just trying to understand what would be a scenario where I would use different costing methods for the same item. Have you come across something like that?
It's same with the PPV, okay? You know, it's same with the PPV only. That is the only question, okay? That's the only driving factor using standard average, okay, for one cost organization, for another cost organization. You know, if the business thinks, so simply, if the business thinks, you don't have a much difference between your item cost and your PO price, then business goes with the standard.
Okay.
Okay. And based on industry to industry. Suppose let us take gold industry. In case of gold industry, every time, you know, it's going to update your purchase price is going to update every time. Okay. So for that industry, you have to go with the average. And let us take some industries, you know, their cost or their price, they won't update very frequently. It will take maybe minimum 1 year, minimum 2 years or 4 years. The cost is not going to be fluctuate very frequently. So for such type of industries and such type of products, you can use a standard costing method.
Correct, but that would be the same across the inventory org. Of course, Oracle Fusion provides the flexibility of defining something, but as different for different org. But most probably the method is going to be the same for gold in either inventory org 1 or 3.
Here
right?
we have to consider one more point also, the local reporting requirements also. Okay, when I say local reporting requirements, so suppose this inventory org, it could be belongs to any country. Okay? It could be belongs to any country also, you know, for that country, you know, for their local reporting requirement, they have to report in the average cost.
Okay. So there probably are the variables that we
probably their territory variables or their reporting structure, how it is.
Thank you, Krishna. Yeah.
But basically, whether standard or average, the driving factor is PPV, and one more driving factor is the industry. Okay, as an example, if I mention gold industry, the price is going to be fluctuating frequently. So for such kind of industries, you have to go with the average only. Okay. For some industry, you know, the price or cost is not going to update very frequently every year or 4 years. For such type of times, you go with the standard costing method.
Sir, this is Sai. Costing module is closely integrated with product management, right?
No, it's not like that. It's not. It's actually linked with the finance, to be honest. Okay, it's a finance subject also.
So we are defining item category, item level. So in product management,
it's not like that. It's actually, suppose if you ask somebody who is preparing for chartered accountancy and ICAA, okay, so they have costing subject. Costing paper is there. Separate paper is there. So in real time also, supply chain consultants is going to have less people are having the costing knowledge. Finance people are having more costing knowledge. And also manufacturing consultants are having the costing knowledge, not supply chain. I do manufacturing and I have costing knowledge. If I'm just a supply chain guy, I should not maybe having this knowledge. I'm a supply chain and manufacturing guy. That's why I have the knowledge. But finance people, definitely they have this costing knowledge. And in the implementations, sir, who is going to take care of this module? It's obviously sharing of the work. Okay. So if the financial consultant is there, first preference is for the financial guy. Suppose if the financial consultant work is more compared to, I mean, in the project, if that guy's work is more and your work is less, then you have to handle it. And also, if the manufacturing is also there, Along with supply chain, manufacturing is there, definitely will come to your bucket only. Because manufacturing is a module that is related to supply chain. And if you know manufacturing, you should know costing also, mostly. Definitely, you know, manufacturing people will have costing knowledge as well.
Sir.
Anyone worked on costing? I mean, there are a lot of experienced people out there earlier. Anyone worked on costing?
Sir,
Krishna,
Hmm.
Krishna, I work in BOM modules in manufacturing.
Okay.
Bill of material.
Okay. So
So
since you have to handle manufacturing and you are taking care of the costing also. Okay.
Yes.
Apurva, tell me.
yeah, so I work in specific industry like real estate and hospitality.
Okay.
So there it's a costing is included in that material management and this one. So and
Mhm.
we generally follow the like weightage average mostly by default. And in
Okay.
case someone insisted, then we are following FIFO. That's such two things.
Okay.
Because it's a specific industry. That's why we know the how many people, maximum people, what client, what method they are using. So we are following that only.
Okay.
Okay, that's it.
Krishna, when I'm working on like costing module,
Okay.
so we are using actual costing,
Okay.
FIFO model, yeah.
Okay.
So it's been only like 4 months I'm into this
Okay.
project.
Hmm.
Yeah.
Good, at least in this batch, some people are knows about the costing. Okay. In Fusion, when I compare with EBS in Fusion, it's very simplified and also comfortable also. In case of EBS, to close the period, okay, you know, a lot of steps are there and a lot of issues you'll get. But in Fusion, it's very easy. The period closing process also. The period closing process, I'll explain you later. Okay. Don't get much issues during the period close process. I know until, I mean, always I used to get, mostly we used to get standard issues only like before you close the period, item is not having a cost. Your item is not approved for the item cost profile. So such type of standard errors we get. Okay. I'll cover the period close process later. If you don't have any questions, then I can move on to the configurations. Clear, right? The purpose of the costing module and costing methods and how the costing method is controlled at which entity level. These 3 points clear, right? And also one more major point is the client has to go with the standard costing or average costing. It's their decision basically. The client will tell you, but why client is going with the standard and average, if you wanted to know, it's because of this. And also one more point I have added, it's based on the industry to industry also. Okay. Now, if I see the, if I show you the configurations, first we have to define the cost ordination. We have to define the cost ordination first of all. And after that, we have to create a cost book. So this is nothing but it's a book of all the costed transactions, like our ledger book. It's a book of all the costed transactions you'll see here under the cost book. And in the relationship in the thought setup, to the cost ordination, we have to assign the inventory ordination. We are linking our inventory ordinations with the cost ordination in the relationship. Okay. I will cover these 3 configurations quickly. It's a setup, right? So I can use the implementation user. Correct? One second, please. And next question, what about licensing? It's a free module or license module? Any guess?
Ideally, it should be free because it is by default. It should be free.
Very good. Good answer.
The
It's
sharing
it's-
module.
Yeah, it's a common module. It's a free module only. It's a common module. Okay, as I mentioned, for common setups, for common things, there is no license. Okay, it's a common module. No need to take the license for costing. Okay. So costing you'll find under this offering. So under this offering, we have earlier used, inventory. Now we are here to use the costing also. So you select cost accounting, and here I'm creating the cost ordination. It's very simple. It's actually very simple. Just enter the name. That's it. I'm defining this cost ordination for the 52nd batch. Okay. 52K standard cost org. 52K standard cost ordination, and the code is standard cost org SEO. Okay. And the legal company, the legal entity we need to attach. I think the legal entity is taking slightly for this. 1, 2 are there. Let me just cross check.
Third one, I
which-
think.
I think third one only, but I would like to cross check because once we finish all the configurations, if that is not the right one, we get into trouble. So you have to attach the right legal entity. So legal entity that we attach it to our BU, we'll just check procurement or the structure, and then I go to business functions of the 52K BU. And I could see the legal entity here. Okay, so this one. Okay, yeah, so that means it's a third one. Okay, so you choose the right legal entity. In case if you have created multiple legal entities, choose the right legal entity. Under which legal entity you have the inventory ordinations that is linked. Okay, and that's it. Enter the full name and then short code. Okay, so in this example, how many cost ordinations we have to create?
5 organizations.
Cost ordinations.
Oh,
2 or
Two.
Standard and the average.
1 for standard and average.
Yeah,
Two.
that means you have to repeat this configuration how many times?
2 times.
This 2 times you have to repeat. Next is cost book. Navigating to the cost book setup. It is also simple, you just enter the name and description, that's it. 52K CB cost book. Enter the name and description and save it. And third configuration is relationship. In the relationship screen, we link our inventory ordinations with the cost ordination. This is the third setup. So here, select the cost org. Select the cost ordination and what is the master ordination. Item validation ordination is nothing but what is your master ordination. Select your master org. Here in the drop down, the reference data set. the reference data set. I'm selecting for the costing setups, for the costing course setups, which reference data set you want to use. So I think I'm using my own, I believe. I think this is the first one. Okay. So here, I know you are, for your view, you can also use the common, right? For your view, you can also use the common reference data set, correct?
Yes.
Yes.
You can use your own one or you can use the common. But here, the costing setups, I mean, this common is defined by the students. It's not a seeded one. What I'm trying to convey here is, in case for your view, if you are using common, the common you will not find in this drop down. So instead of common, you have to select enterprise here. You have to select enterprise set here. I don't know the design reason. I don't know the design reason here. For the view, if you are using common reference data set, that common reference data set you will not find here in the drop down. You'll find only enterprise. You have to select enterprise here. Okay. Clear? And coming to the inventory ordinations, I'm going to add. So what is your standard costing ordinations? Add those. Suppose you are having 10 inventory ordinations. Out of those 10, for which ordinations you want to follow standard costing method. Okay, those ordinations you have to add here. I have 2 inventory ordinations. I would like to add all the 2 inventory ordinations as part of my standard cost org only. Okay. So this is a standard cost ordination. To the standard cost ordination, what I'm doing, I'm adding all the nothing but the 2 inventory ordinations that I have. And if I go to cost book, just now we create a cost book, right? You have to attach that cost book here. Attach that cost book here and add your ledger also. Add your ledger. And this is exchange rate type. Exchange rates. Okay. And what is the first costing period? What is the first costing period? Okay. Now, I would like to select the costing period as April. Okay. The starting cost, I mean, you can select January also, but I'm selecting April because I have transactions from April. So I would like to capture the transactions from April only. No, January is not required. That's why I'm selecting April here. So in this screen, what I have done, I'm repeating the cost book that we defined in the previous setup, we are attaching, and then ledger. And then what is the first period to start? I'm not starting from January. Why? Because I don't have transactions in January, February, March. I don't want. That's why I'm starting from April, because I have transactions from April only. Because 52 gave batch, I started in the month of April. So that's why 52 pay batch transactions I have from April only. Okay. And this is conversion rate type. I think this is already this conversion rate type is is going to hold the exchange rates. When you're defining the exchange rate between functional currency to the foreign currencies, nothing but from INR to USD, USD to INR, from INR to Euro, Euro to INR. When you're defining these conversion rates, you define under a particular rate type. That rate type I'm selecting here corporate. Okay. Click on OK. The effective start date of the cost book is more than More than I selected 22. Oh, sorry. Sorry, I thought I selected 23. Okay, let me choose April 23.
The effective start date also starting from 0001 above.
Sure, that should be okay. It's not a
Okay.
problem. Okay. I mean, it's just a warning. It's not error. It's not error. It's a warning. Okay, that's fine. We can go ahead with this. Not a problem. Okay. And one more important point is the period end validations here. What is this period end validations? I will explain you after a short break. I will explain you after a short break. This is important. We'll take 5 minutes break. So today's session planned till 9:30. All of us will take 10 minutes break and start the session again at 8:45. Okay.
Okay, sir.
With a 10 minutes break.
Okay, sir.
And period end validations, I'll explain you after the break. Okay. Then back to we are working on the third configuration, and what we have done here, okay, we have assigned our inventory ordinations to the cost ordination, and we also attached the cost book, and also we have decided which reference data set should be used for our costing setups. And coming to the reference data set, we selected the reference data set that we have created. In case if you are using the common, the predefined one, the common you will not find in the drop down, because costing setups are controlled directly at the enterprise level. So you are able to select enterprise in the drop down in case if your reference data set is common. Okay. And we have added inventory ordinations, and then coming to the cost book. After you added the cost book, there is something called period end validations. This period end validations is nothing but every month we consider as a period. Currently, we are in July period, and our next period is August, and our previous period is June. Every month we are going to close the books and we are going to open the books. Okay, every month. So here coming to the the previous month book close or current month book close or next month book close, whenever you are closing your that particular month book, so what you want to validate, whenever you are closing that current month book, what you want to validate. Okay, I'll tell you one example here. Work order. You see something called work order here, right? If you see something called work order here, okay, work orders not closed. Okay, so this is nothing but what is meant by first of all work order. Work order is a manufacturing order. Work order is a manufacturing order. Okay, if there is a work order, then only your production department, your manufacturing department is gonna start manufacturing the product. Okay, work order is nothing but a manufacturing order. So for work order, the statuses are there. Okay, initially, initial status is I think unreleased, I believe. I forgot. And then later release nothing but
Yes, previous is unreleased.
yeah. I think I'm not I got a doubt whether it can be incomplete or unreleased. I have a doubt. I think it could be unreleased only. Unreleased. Okay. And then unreleased, and then later released. The next status is, and the next status is once you done with your manufacturing, the status is going to be complete. And after completing the manufacturing, you can close the work order. you can close the work order. Okay. So here, if you see this wording, completed work orders not closed. Nothing but, we created a couple of work orders in what is our current period? Current period is July, right? Okay. In July, I created a couple of work orders. 1, 2, 3, 4, 5, 6. I created 7, 8, 9. Okay. All of them, all these 3 work orders completed, but I have not closed them. Completed, but I have not closed. Okay. So here, if you see this validation, completed work orders are not closed. Nothing but these 3 work orders you have completed, right? You have completed, right? If it is error means you have to close them before your period. Before your period close, you have to close all these 3 work orders to close your period. Understood? What is the validation understood here? In July month, these 3 work orders you completed but not closed. But to close the July period, the work orders has to be closed because it's throwing error. If you say ignore, then without closing these 3 work orders, you can close July. Understood?
Yes, sir.
Yes, sir.
Any confusion? No, right? Good. So basically, this is one of the validation. The validation is nothing but all the completed work orders should be closed or not to close that book. So if it is error, you have to close all the completed work orders. Without closing them, you are not able to close that period. You are not able to close that book for that July month. If it is ignore means that validation can be ignored by the application. Completed but not closed, just ignore them. Clear?
So Krishna, it will be carried forward in the next
Yes.
month.
Yes,
also,
every
right?
month also. Until unless you change this
Yes, sir.
configuration every month. Okay. And this is one of the period end validation. Nothing but application is going to validate in that current month how many work orders are created, those work orders completed or not. If they completed, they are closed or not. They're closed or not. If it is error, if they're not closed, you're not able to close the book. This is one of the validation. If it is ignore means ignore it. If there is a completed work orders, ignore it. Just close the July book or maybe next book, next month also or whatever for all the months. Next, one more validation. Create accounting in file and mode. So this is nothing but first of all, what will happen is when you perform any transaction, it could be sub-inventory transfer or miscellaneous issue or receipt. Any transaction when you perform, first of all, the transaction is going to be costed. After the transaction is costed, we post to the ledger. The transaction we post to the ledger book. So to post to the ledger book, we need to run a program called create accounting. This is a program. So what this program will do is, this program is going to post the transaction to the ledger. This program. Okay, so here that validation is also there. Do you want create account to be run mandatory to close the book? If you say ignore, not mandatory. Just ignore it. If the transactions is posted to the ledger or not, don't worry about that. Just close the July or August or whatever the cost period. Clear? If the transactions are not posted to the ledger, just close the book. It's okay, just close the book. If it is error means you have to mandatorily post to the ledger. That means you have to run create accounting mandatorily. Clear?
Yes, Krishna.
Yes, sir.
Yes, sir.
And then pending interface. This validation is nothing but here this transaction we performed under which module?
Inventory module.
Inventory module. So that transaction should be interfaced from inventory to the costing. It has to be interfaced to the costing module. In the costing module, the cost is calculated. So all the transactions, it could be from inventory or it could be from any module, all of them we have to transfer to the costing module. Okay, that is mandatory actually. Here, see here, if any transaction, if it is not interfaced, you have to run a program. There is a program called transfer transactions from inventory to costing. If you don't run this program, what will happen? The inventory transactions, it won't interface to the costing module. If there is a transaction and you have not interfaced to the costing module, you are not able to close the book. Why? Error. Every transaction, and here in this example, all the inventory transactions has to be transferred to the costing module by running this program. If you don't run this program, if the transaction is happened in the inventory, but it is not interfaced to the costing, you're not able to close the book. Okay. So other examples I will explain you later, because if I explain all of them now itself, it's going to be too much. Okay, so I think you just have a basic, I think you understood the basic concept of the validations. What system is validating before you close the book? What is validating? Whether the transactions are interfaced or not, whether the transactions are posted to the ledger book or not, and whether the work orders are completed, closed or not. There are a couple of validations are there like this. So whenever you are closing the periods, the system is going to validate all of them. If you select ignore, it will not validate anything. It will simply ignore all this. It will simply close your period. Right? But we should not do like that. All these validations should be in place. Then only whatever that we need to do in that month, we're going to do it. Otherwise, we don't do that, and it will create a mess up in the application. Any questions?
So that interface program, do we need to schedule on each
Yes.
day or after each transaction? Or
Not
each day,
required
end
for
of the
each
day?
transaction. End of the day is fine.
End of the day. Okay.
Krishna, pending shipping transactions is not included in that validation type.
It's different in Fusion.
Oh,
Okay, and no comparison like EBS. Okay.
so in terms of costing,
We'll
how
discuss that during the period close. Okay.
Okay, fine.
Okay, relationship is important configuration. Okay, I'm done with the relationship. And next is valuation structure. Valuation structure. This valuation structure, this setup is nothing but the inventory valuation you want to see at which level. Inventory valuation you want to see for every org. Every ordination is how much value it is having, or every sub inventory how much value it is having. You want to see at which level, or every cost ordination. So here, what we have done, our inventory org we attach to cost org, right? Our inventory ordinations we have attached to the cost ordination, right?
Yes.
Okay. So you want to see the inventory value at inventory org level or entire cost org level, or you can see at sub inventory level also. This sub inventory is having how much value, RM is having how much value, FG is having how much value. The valuation you can see at sub inventory level. You can see for all the sub inventories at the org level, inventory org level. You can see for all the inventory ordination at the cost org level also. That's nothing but your valuation structure. That's nothing but for your valuation structure. And in the application, what type of transactions we perform? We perform inventory transactions, and we may perform expense transactions, and we may perform consigned transactions also. Okay. Inventory transactions are nothing but, I think one of the student asked me this question, if I remember, the difference between inventory transaction and expense transaction and expense item also from the 53rd batch. Okay. And what is meant by consigned also? The consigned transaction is nothing but, there is a concept called consigned inventory. There is a concept. Consigned inventory is nothing but, normally what is the process? You place a PO and your supplier is going to send the stock to you and you consume that stock. That is the process. But you have good relationship with the supplier, and also you are frequently purchasing the stock from that supplier. Then what the supplier can do is, the supplier can keep some amount of their stock in your company premises itself. They're going to keep their stock at your location. At your location. The stock is available in your location, but it is not your stock. It is whose stock?
Supplier stock.
It's a supplier stock. Okay. And there is a transaction called a consigned transaction. That transaction is nothing but, you can transfer the stock from the supplier sub-inventory to your normal sub-inventory. If you want to consume, what you have to do, first of all, from the supplier inventory to your normal inventory, you have to transfer the stock. Okay, after transferring the stock, you can send a consumption advice to the supplier. Consumption advice. Hey, I have consumed on so and so date so much quantity. You can send that consumption advice to the supplier, and supplier is going to send you the invoice according to your consumption advice. Okay, and you will make the payment to the supplier. So this entire process is called as consigned process. It's consigned inventory, it's called. Okay. If the client is having consigned inventory, if the client is using consigned inventory topic, then you have to create this valuation structure for the consigned transactions also. Clear what is meant by consigned? Consigned inventory clear?
Yes, sir.
Yes.
Okay. And expense transactions. Okay. If you are purchasing anything, that is expense to the company. Suppose if you purchase a laptop, it's an inventory transaction basically. Okay. And if you purchase something called tissues or cookies or antivirus and Microsoft Office license or Windows license, all of them are expense transactions. That's expense to your company. It's not an inventory to your company. If you purchase anything that gives a value to your company, it's an inventory transaction. Okay, and if it is expense to the company, it's an expense transaction. So in the application, we perform these three different type of transactions. It could be inventory, it could be expense, or it could be consigned. So the valuation structure you have to define for all these three types of transactions. And generally, the clients will be using the first two. The consigned is, rarely used method, the consigned topic. So you can check with the client, are you using the consigned or not? Okay, if the client is not using the consigned, then you can create a valuation structure only for the first two. That is for inventory, and another one is for the expense. When I say asset and inventory, both are same. Okay, let us see this configuration. And while defining the configurations, if you get any questions, I'll clarify. Valuation structure. And I'm creating a valuation structure for inventory transaction. First of all, it is asking for the reference data set. I'm selecting my reference data set, and the valuation structure type you see here. You are defining for inventory. Yes, I'm defining for inventory, nothing but asset. Enter the name, inventory VS valuation structure, and the structure mode. This I'll cover later, but you can select right now both auto and manual. auto and manual. And this flexi field structure is nothing but, as I mentioned, you want to see the inventory valuation at sub-inventory level or inventory org level or cost org level. So accordingly, you have to select here. If you want to see for the entire cost organization, nothing but you can see value for the entire cost org, inventory value. You cannot see it for every inventory org level. If you select cost org and org, that means you are able to see for every individual organization and then all the cost, including cost org also. And if you wanted to see sub-inventory level, you see sub-inventory level value and inventory org level value, cost org level value. How much low level you wanted to see your valuation. You want to see by serial wise also. You want to see by lot wise also. How much lower level value you wanted to see. Okay. Cost org and the inventory org is enough. This level is okay. So for this inventory organization, what is the value? For another inventory organization, what is the value? For all the inventory organizations at the cost org level, what is the value? That is fine. Clients generally they don't go by serial lot wise value. They won't want to see by serial wise value. They don't want to see like that. Cost org and inventory org level is okay. Now we are creating this valuation structure for inventory transactions. Now similarly, I'm creating this valuation structure for expense. Select the reference data set. And I'm selecting the expense now. Valuation mode, both auto and manual. Structure, I'm selecting cost org and org level. That means I would like to see my inventory valuation at inventory org level for every inventory org level, and for all the inventory organizations, nothing but cost org level. Okay. Click on save and close. So how many valuation structures we created? 2. One is for the inventory, and one is for the expense. If you want to create for consigned, you have to select consigned type here. But did we perform any consigned transactions? Did we perform any consigned transactions?
No.
No, we didn't. Not required. Not required. Not required to create that valuation structure. Good with the valuation structure. There is a link with the valuation structure to valuation unit. There is one more link is there. Okay. So far you got an idea, right? Next, 5th setup is cost elements. Cost elements is nothing but, when you're manufacturing a product, what are the different cost elements that you have to consider when you're manufacturing a product? Raw material cost, labor cost, and what else?
Processing cost.
What else? Yeah, it could be processing cost contains many things. Can you please tell that in detail?
Material overhead cost.
Machining cost also.
You have used electricity for the manufacturing, electricity cost. You have used some gas cost.
Transportation cost.
Yeah, all the different cost elements, whatever, by considering all these cost elements, you'll fix the item cost, right? You'll come to know what is the final product cost, right? You have to calculate, you have to consider all these different cost elements. Then only you derive the final product cost. The end product cost is identified and derived by all these cost elements. So you have to ask the client. So if the client is into manufacturing, you have to ask the clients what type of different cost elements that you are, or that is associated with your manufacturing process. You have to ask them. They will tell you water charges, petrol charges, and gas, electricity charges. They will tell you all this apart from the known charges. Known charges are nothing but raw material cost is known and labor cost is known. Apart from these, there are other cost elements also there, which we don't know. The client will tell you according to their business process. They will tell you. Okay. So all those cost elements we have to create in the application. Okay. I will define now. If I go to manage cost elements, and here a lot of cost elements has been created by the students, and I'm going to create a cost elements particular to our setups. So what is the main cost? Main cost is material cost. It's nothing but raw material cost only, right? Okay. And what is the reference data set? I am selecting, we are defining this for which reference data set. I'm selecting our reference data set. And any cost element that you are creating, it should be fall under these types only. These types only. It's a straight away material cost, or the element that you are creating, it's a overhead, or the element that you are creating, it's a resource cost. Okay. In case of resource cost, you can also, there are two types of costs are there. You can also create overtime cost also. The planned time for that product manufacturing is 10 hours, but it took 12 hours. For the extra 2 hours, we have to pay extra OT time. So straight away resource cost is different and the OT cost is different, because overtime cost is going to be extra cost. It's an extra cost. Normally, if the resource cost for 1 hour, suppose if it's 1,000 rupees, for overtime, definitely it could be 1,500 and 1,200, right? Right? Right, team?
Yes,
Yes, sir. Yes,
So
sir.
normal resource cost is different and overtime cost is different. In that case, how many cost elements you have to create for the resource? Normal
Two.
resource cost
And
and
overtime.
overtime resource cost. And for that manufacturing the product, how much time it took? 12 hours. What is the plan? 10 hours. But it took 12 hours. For 10 hours, we will calculate normal resource cost. For 2 hours, we will calculate overtime.
Okay.
So any cost element that you are creating, that should fall under these types only. That cost element, it belongs to resource cost or it belongs to straight away material cost. Okay. I am selecting material here. Okay. Like this, we can define a lot of different costs in the application. Okay. And I'm defining one more cost also here, that is transportation cost.
So in this scenario, we have to create resource cost and overtime cost. Two elements should be associated with the resource cost.
I mean, in the previous example.
Previous example, correct?
That should be linked to the resource cost element.
Type only, element, yeah, correct.
Okay.
Element should be two, but type is the same. Yeah.
Yes, type is same. And I don't create the resource element because we don't have manufacturing. So that's why I'm not defining anything related to manufacturing cost elements here. Okay. I'm straight away defining the cost elements which are associated to the direct material cost. Okay. I'm not defining anything related to manufacturing because manufacturing is not in the scope. And even if I define also, if I have to show you, I can be able to betterly explain if I have a work order. Against that work order, if I have all these consumptions, then only I'm able to properly execute and show you. Otherwise, if I don't define here also, it's a waste. I defined two cost elements. These two cost elements, both are related to direct material cost only. That's why I selected the element type as material. Okay, clear?
Okay, yes, Krishna.
Okay, perfect.
And next setup is overhead expense pool. Okay, this is nothing but pool of your overheads. This is nothing but pool of your overheads. As I mentioned, electricity cost, water charges or petrol charges or any other charges, you can pool all those overheads into one group. Okay, that's called as a overhead expense pool. That's called as a overhead expense pool. And it's fine. You will find that under the all task. I go into the all task, and here I navigate to overhead expense pools. And here it's just a name. Basically, it's a grouping, a separation by the group. You have different overheads, and you want to group it separately. You want to group it separately, and you can create them as an expense pool over here. I'm just naming here, but the real usage you will understand when I'm defining the item cost. The real usage you're not able to understand, and even I'm not able to relate and explain you currently until unless I define the item cost. During the item cost creation, I will explain you what is the importance of this expense pool. Okay. So currently I just created the configuration. Next setup is mapping. Our cost elements has to be mapped with the standard Oracle given cost elements. Has to be mapped with the standard Oracle provided cost elements. We define couple of cost elements here. Okay, those cost elements you have to map with the Oracle provided cost elements. Okay, that mapping we will do it here in the 7th setup. Cost component mapping. Just enter the name here. Mapping. This is basically elements mapping. Elements mapping and a reference data set. And in the bottom, here in the first tab, the predefined cost elements. Okay, Oracle provided cost elements. Oracle provided cost elements is attached under which reference data set? Oracle. What I'm saying, what is this setup? Oracle cost elements. We are mapping with our cost elements. So Oracle cost elements are available under this reference data set. What are the Oracle cost elements? We will see that now. I think I should select here the project progress. Somebody changed the name of the predefined reference data set. And it's creating a confusion here. Okay, the name of the predefined reference data set is let me refer to the previous setup that is created by. And this is the set name. All small. Predefined reference data set name somebody modified in this instance. And that's where I'm having this problem. Who are there? About these two, which is the predefined. Do not touch the predefined setups. The seeded setups. Any is reference data sets. Common. I think this could be the seeded one. Somebody. This is being created by the students with a similar name. Okay, this is the predefined one. Okay. Actually, should be displayed like this. For our understanding, I'm changing the name. This. No, it's not allowing us to update now, it seems like. Predefined. Code. Let me check the code. Okay, this is the one is the right one. I selected that. Okay. You understood, right? My pain. I have to select common here, and a common multiple are there. Common multiple are there, and there was a confusion, and I verified, which is the right one, and then I selected the right predefined reference data set, and I see these cost elements given by Oracle. Okay, these are the cost elements given by Oracle, and I am selecting the item price. And coming to item price, the cost element that we created two cost elements, right? These two, out of these two, which one is belongs to price of the item? Is a transportation cost?
Material cost.
It's material cost. You understood, right? The elements that we have created, that you need to map with the standard Oracle provided elements. Okay, clear? Clear, team?
Yes, yes.
Yes, Krishna, yes.
Okay. And coming to the other elements that you see here, okay. And which elements mapping is mandatory that I have given here. One is item price is mandatory, and then freight. Next, let's map the freight now. coming to the freight. Okay. Our elements we defined under which reference data set? This reference data set, and coming to the freight, I can link the transportation cost. Okay, you can define these elements like I named at transportation cost, or somebody maybe named like TP cost, okay, or something else. You can use your own names for these cost elements, and that need to be mapped with the standard element. Okay. And in case if you have defined another cost elements like loading charges, unloading charges, and that loading and unloading charges, you can also add to the freight element here. Next, as per my document, item price is completed, freight is completed. There is something called non-recoverable. Okay. So this also has to be mapped. And I don't know why it has to be done. And it is something related to finance topic. But this also need to be created. And this is for the non-recoverable tax. Okay. I'm selecting the non-recoverable tax. And to this non-recoverable tax, you can attach the material cost. You can attach the material cost. This third one I did blindly, and I don't know the business reason also or conceptual reason also why it has to be added. Okay.
Krishna,
But
this
without-
is used
but-
for service items only, I think.
But when you don't configure this, you face some errors during the dropship and back-to-back cycles. Okay. So during my configurations, during my project, when I got such errors, I created a ticket to Oracle. Oracle asked me to define this cost element. I did that, but that guy don't know why that has to be done, even from the Oracle guy. And after that, not expect this why it has to be added. And this is also related to tax, right? I think this is something I need to check with the finance team also. Maybe they have some idea on it. But these three are mandatory. Your cost elements has to be mapped with this three standard cost elements. And what is the name of this setup? Elements mapping. Clear?
Yes.
Yeah. Okay. And I'll stop by today because 8th, 9th, and 10th, they are very, very important configurations, and even 11th one also. So these important configurations I'll cover tomorrow. I'm stopping the session by now. If you're having any doubts in today's explanation, please.
What is that landed cost?
In case of, landed cost is the name itself. Suppose an example, you're purchasing cost in the car you're purchasing, Indian car only. You're purchasing India car. Okay. And you're purchasing the car from abroad, another country. By the time that you receive car to India, apart from the original item car price, you have a lot of other costs are there. By the time it's landed in India. Understood, Chetan?
Yeah, it includes all the cost elements.
All the cost elements, all the cost elements.
Okay.
By the time that
Tax-related,
by the time that you receive the product to your country.
Till the delivery, right?
Yeah, to your country.
Yes.
The product that is landed to your country.
Yeah.
What is the apart from that original item cost, there are a lot of other costs are there.
Right.
Okay, all those falls under landed cost.
Okay.
That is also called as LCM, landed cost management.
Yes, LCM.
I have not worked on that. Okay, but I know how it behaves. Theoretically, I know how it behaves.
So instead of predefined, we can select the that landed cost also, right?
Yeah, when you're defining the landed cost, I mean, when your client is having the landed cost scenario, then you have to configure that by selecting it.
Okay, okay. Yeah,
Mhm.
understand.
If the client is importing the products from another country,
Right.
okay, and it has various costs to be considered for importing into the local country, then in that case, you need that sort of setups has to be defined.
Right. Krishna.
Good.
Yes, Krishna.
Yeah. Thanks. Krishna.
Some interesting session, some confusing session, some confusing
Yes,
topics,
confusing topics.
something more interesting, something little confusing. But whatever the confusion that you have, once you see the end-to-end process of the costing module, that will erase from your memory the confusions. That will be clarified. Because some setups I cannot even explain you at the time of creation. I can able to explain at the time of usage only. Let us take over expense pool. I cannot explain you now. I can explain you when I'm using it. Okay, that's why some setups I do without explanation, but the explanation will be given later. Okay. Any confusion that you have, you let me know. I'll try to clarify once again.
Sir, Rahim this.
What's up?
Yeah, with standard and this average cost method, right?
Okay.
You told that in some cases we use hybrid method also. So for this hybrid method, how the process would be like if both are combined, like in this case, standard and average both will be combined in hybrid process, right? So how it will the process will flow in the hybrid method.
Okay. You
And
defined an item. Okay. This item, miscellaneous, let's take miscellaneous transaction. You performed under this ordination.
Oh.
It will follow which cost method?
Standard.
That's it. Same item, same transaction. You performed under this cost ordination.
Okay. Okay. Here we will be differing between the organizations when it comes to hybrid. And in real time, how frequently we will use this hybrid method or rarely?
Not really that much rare.
Okay.
And not frequent also.
Oh.
Out of I did four cost implementations. Out of that, for one implementation, we did hybrid. My current project is hybrid only.
Okay.
Okay. Any other questions? Any other confusions?
So in cost element mapping, now in case we have not done that mapping, then what would be the happen in case?
You will get errors. Your transactions won't be get costed, and you'll get into errors. Okay.
Okay.
Now, one more question here. Suppose the cost method, if you are associating with the cost org level or cost with the item category level, item level means in depth, actually nothing. But if you are giving the item level means each item level, we are capturing the item cost. So category means higher level. Cost level, organization level means the top level. Am I correct? That is the cost method or defining standard cost method with explanation.
If you don't mind, I got distracted with your question. Can you please
Yeah.
repeat?
Yeah, I can repeat actually. Yeah, actually the we define the cost method in the arc level. Also, we can define the cost method like a standard cost method. So we can define the cost method at item category level. We can define the cost method to item level. So this three little. I mean what we can say. So if we need in-depth clarity for the item, we can define the cost method at the item level. So you want to, and that is our understanding is correct. Suppose you want to capture the organization level, which that is a way we can define the cost method at arc level.
Your question is like, in which cases we go with the org level control, category level control, and item level control, right?
Yes, correct.
That's your question, right?
Yes.
Okay. I'll clarify your question once I show one flow. Okay. Please.
Okay. Part of my question.
Yeah. And please do remember me, because right now in my current project, so I think I think you people know my approach. Once I done our configurations, I'll show you again configurations in my client application, right?
Yes. Yes.
At the time of showing the configurations in my client application, I will give you the justification. Okay, why you can go with the category level and item level. I'll give you the justification there. Okay,
yeah.
Because
Thanks,
in my current project we are using category level. Okay, there is a good example why we are using the category level in my current project. Okay, I'll take that example and I'll explain it.
Thanks, Krishna. Okay. Because we got confused, because the three level we can define what kind of scenario we are going. Yeah. Thanks, Krishna. That is very.
If we define the item at org level, cost org, and suppose the requirement came that we have to define that item at item level. So is it possible to remove from org level and define at item level?
Not possible. You have to inactivate all those items, create a fresh items, and for the fresh items, delete.
Okay, understand.
Actually, in our current project, same thing happened.
It's a common, it's happens most of the time. Client will change the requirements. That's the problem.
Right.
Apurva, you told some simplest formula. What is that? I don't want to give Oracle formula. If I give Oracle formula, students may confuse.
Yes, a total price of the material divided by the total quantities, total number of quantities. That is the weightage average.
Total price, total.
Yeah,
I mean, that's
yeah,
what
yeah, 400, take example, 3 part, 400, 500, and 600. So 400, 500, and 600 total price divided by.
That's nothing but what you're saying. This one, right?
Perfect. That is.
Okay.
Simple.
I have shared one link, sir. They can check for this formula.
Oh, okay, sir. If simplest formula is there, I won't try to explain to them. The same I think I explained, right?
Yes, sir. Correct. Yeah.
Same what you purchase the 20 items, the cost of each item is $1,000. 20 into 1,000 is 20,000, and you purchased on 18th. You purchased 15 items, and unit price is. This is the total quantity that we purchased so far, 100 quantity, and this is the total cost that we purchased this 100 units. And
we will divide that.
Yeah, weighted average cost. So total inventory purchased in that quarter is 1 month divided by the total inventory count from that quarter, that is 100. So the average it is 1133 per unit.
It's a total price divided by total quantity. No, sir. Total price divided by total quantity. Total price you have to put left hand side, then total quantity, number of the quantities. Right?
Okay. If that is the case, need to multiply it by 100.
Krishna,
Okay.
I think it is like from this example here,
Mhm.
10 into 10, and
Hmm.
10 into 100 plus 12 into 100 plus 14 into 100 by total quantity, I believe.
So it will be like, suppose item A under bracket, total
Yeah.
number of quantity
Yeah.
for this date plus total number of quantity for
Yeah.
another date plus total number of quantity for another date divided by total
By total quantity.
quantity. Yeah, it is like that.
Correct. So what I've done is total price by. Okay, I think you are right there. So total price by total quantity. Okay, that's correct. Okay. Clear?
Yes, Krishna.
There is one more point is there. I'm reading that.
So how much we sold? Next steps,
Uh,
Krishna.
Okay. That's okay. I mean, too many examples, too many scenarios, so it will create confusion again. Now we have clarity. Let's go with that clarity. And also, these calculations we don't see at all in the application. I mean, application will take care of that. We don't really go and see that calculation in the system.
Yes, sir, we are not there, but we are getting the tickets on that. Users will ask why this this one price particular item price will now showing like that price. Okay, we should know that one. We have to explain to them because of this. Okay, like that.
But those kind of people are very new.
No, even sometimes we are getting call from the CA, those are CA or even MBA. Like
Is
that.
it?
Yeah, that's the thing. We have to explain him because of that.
CS also calling, huh?
Yeah, means like we don't know, right? They will say that one.
For chartered accountant,
Even and
costing is a paper. There is a paper for costing.
yeah, but we have to, as a functional consultant, we have to explain this. This is the way our software is calculated.
Okay.
Okay, sir. Thank you.
Okay, team. If no questions are there, then I'll see you tomorrow.
Thanks, Krishna.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.